All right, what is up, traders? What's up, tycoons? Super excited for today's video. We're going to do an earnings season playbook for Q1 of 2023 and go over some of the reports to watch. Now, earnings season is simply the months of the year during which the most publicly traded companies release quarterly financial results and earning reports, notably earnings per share, which is EPS, and revenue. Usually this is in January, April, July, and October, and we are kicking off earnings season. Today, we had the major banks doing a lot of their earnings, and the stock market rallied pretty hard, guys. So, we're seeing a lot of different things happening in the market right now. And as the second earnings season of 2023 starts to take hold, the S&P 500 has started the year up 7.5% as investors look toward a market rebound following a historic correction in 2022. However, some of the same macroeconomic conditions are shaping the business environment. Inflation is no longer flirting with 9%, but it's still well above the historic average. The Fed is still hawkish, but its appetite for three-quarter hikes has dwindled. The growing probability of a recession continues to cast a shadow over corporate earnings and forward guidance as well. This forthcoming earnings season plays a significant role in determining the market's direction for the remainder of the year. With this in mind, investors should prioritize market monitoring, conduct comprehensive due diligence, and pay close attention to the finer details of each company's financial reports during Q1's earnings extravaganza. Now, I'm going to go and give you guys an entire earnings season playbook. We're going to take a look at a lot of different data. All right, we're going to go over some of the biggest winners and losers. All right, and really give you guys a good breakdown, when it comes sector-wise as well. So make sure to smash that like button and subscribe to the channel so you guys don't miss any of my future videos. Now, the content provided on this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals that appear on this channel are not registered financial advisors or brokers. Trading in stocks, bonds, commodities, crypto involve a significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer. We're going to go ahead and start off. We have a lot of upcoming earnings to watch. We're going to break down some of those. Now, if you take a look here, the chart that we have specifically right now this is going to be sector performance, right? And so we can actually see which ones have been the winners and which ones have been the losers. And XLK is the technology sector, guys. That one has been outperforming really the rest of the market, up 21%. And we have XLF, the financial sector, actually performing the worst right now. So it's pretty much an exact opposite of what we saw in Q1 of 2022, where tech was, all the way down here. And you saw financials as well as energy, okay, actually leading the market, right? And we had XLK and XLC down here at the bottom. So really interesting to see how the year is starting off and how things are pretty much a mirror. The leading sectors, as I mentioned, are tech and communication services. They dealt with numerous layoffs, and consumers continue to spend despite all of the economic concerns we have. Energy felt the pressure of falling oil prices. But one thing to note that I've made a lot of videos on is that OPEC recently cut oil production, right? And so that is causing a little bit of a rally in energy. Now, we're going to see if that rally is going to continue throughout the next coming quarter, maybe the next two quarters, or if this is perhaps just a little bit of a momentum catalyst bounce and things are going to end up actually pulling back. All right. And the healthcare sector also adapted to a post-COVID-19 world. As the earnings season unfolds, investors' eyes will be peeled for surprises, rebounds, and potential opportunities that lie ahead in the market. After one of the worst performing years on record for tech, investors responded with a show of faith in the industry. Through March 31st, big players like Apple, Microsoft, and nvidia have seen significant growth, guys. And that's what we have here on our charts right here. Apple is up here on top. We have Microsoft and then NVIDIA. NVIDIA has gained a lot of attention due to the buzz around AI, which is artificial intelligence. And I mentioned this before, but its chips are crucial for advancements in this field. So, a lot of people really consider NVIDIA, one of the top, if not the top AI stock. Additionally, they're impacting the data center space with their new Grace GPU super chip. The company says this powerful chip can double the computing strength of older data center chips worldwide. On April 26th, investors will discover if the strong start for big tech stocks was justified when Microsoft releases its earnings reports. Apple and nvidia will follow with their own earnings announcements on April 28th and May 24th, respectively. Now we can take a look here, all right, and we can see, really how these stocks have performed. And this is the beginning of the year on all of the charts, obviously January, and we can see it's been a very, very strong move to the upside for all of these. And so, really just, showing you guys on a graph that, technology really has been outperforming since the year has started. Now, the communication services sector is where the bad news is good news sentiment was felt the most. All three of the biggest companies in the sector are benefiting in some way from either announcing rounds of layoffs or scrapping less profitable ventures. Which that's something that we've seen, like when Meta, when Facebook started announcing layoffs, right? That's really when we started to see the stock started to recover. Their strategic pivot might have been the most noteworthy, pumping the brakes on the metaverse project and conducting two separate rounds of 10,000 plus job cuts. Many investors saw both initiatives as corrections to pandemic era splurging. Meta will reveal the effectiveness of its cost cutting on April 27th. That's when its next earnings release is. And Alphabet, which is Google, will announce its earnings on April 26th. And Netflix will release its numbers a bit earlier on April 18th. So we have Google right here in the middle. Okay, and they did see a pretty sharp drop when they initially unveiled their Google AI, the Bard AI. But since then, it has recovered as people realize that there is a lot of potential. And, maybe the unveiling was rushed a little bit and they did it a little too early. But people are starting to realize that, hey, maybe that was a potential buy the dip opportunity on Google with that collapse. Now, Netflix also has been performing very, very well. And if you see here, this really actually bottomed back in the summer of 2022 and has been on a very strong rally ever since then, going from, below $180 all the way up to $360. So, from the lows to the highs, over a 100% move. Now, it has had a little bit of a pullback here. So we're going to see really, where it goes from there. Now, in another laggard turn leader moment, consumer discretionary saw several of the biggest companies in the sector bounce back from double-digit losses in 2022. Tesla, which fell 65% in 2022, had mixed results in early 2023. The Elon Musk-led electric vehicle manufacturer made fewer cars than experts predicted, but they delivered more EVs than expected in the first quarter. Throw in multiple price changes across their fleet of vehicles, and April 19th is showing up to be one of the more intriguing releases of the period. And Tesla is always a big factor and one that people are always eyeballing a lot, especially when it comes to the retail trader and the average retail person looking at the stock market. But Amazon is also going to be pretty important here. And we also see Home Depot as well here on this chart. So we have Amazon, we have Tesla, we have Home Depot. Tesla did really, really great, guys, going down from 100 all the way back above 200. It has started to pull back a little bit since then. We see Home Depot has really been tanking ever since February. And then we have Amazon here just, kind of steadily inclining, right? Not so much of a rapid growth as we've seen in maybe Meta or in Tesla, different things like that. But Amazon has recovered since its lows in, late of 2022, early 2023. Now, these are the past and future earnings data for the aforementioned 9 companies that's going to be listed below right here. So if you want to take a screenshot or dive into this a little bit further, you can. All right. If briefly, I'll go over Apple. Their actual earnings per share for Q4 of 2022 was $1.88. You have Amazon at about 3 cents. You have Google here at $1.05. Home Depot at $3.30. Meta Platforms was about 176. We have Microsoft at 232, Netflix at about 12 cents, nvidia at about 88 cents, and Tesla at about $1.19. And you can take a look here at the estimates and see which ones beat. All right. On the last report, Apple did not beat. All right. Their estimates were 191, came in at 188. Amazon beat. All right. It was at 116 or about 17 cents. And it actually came in at 3 cents. I'm sorry. So, they didn't beat there either. We have the estimates for Google. We're at about $1.20. All right. And they came in at $1.05. Home Depot was about 328 estimates, came in at 330. The estimates for Meta were about 223, and those came in at 176. And, you can dive in a little bit more. I don't want to make the video too long and focus on, too many of the individual numbers. Now, when it comes to some of the lagging sectors of 2023 and the major stocks, when the second largest banking failure in U.S. history and Credit Suisse's collapse occurred within the same month, it's hard to imagine that the financial sector would end up anywhere but at the top of the laggard list. The Silicon Valley's bank collapse reverberated throughout the banking industry, causing the Dow Jones U.S. Bank Index to fall 13% in Q1. However, the most prominent players in the financial sector, such as Visa and JP Morgan, seem to be insulated from the fallout. They benefited from month-over-month U.S. revolving consumer credit outstanding reaching 12.75% at the start of the year. Investors will be closely watching the financial sector to access the damage caused by the turmoil. JP Morgan Chase is set to release earnings on April 14th, and they did that today, and the stock actually performed pretty well. Right on the top here, we have Berkshire Hathaway. Then we have Visa here in the middle, and we have JP Morgan Chase. And you can see JP Morgan bottomed around October of last year and had a very strong rally from near 100 up to about 143 at the highs there. Visa also bottomed in right around 180. Okay, and hit highs of 231. And then we have Berkshire Hathaway here also bottoming right around the 270, 260 region, hitting highs of about 320. Now, the falling prices of WTI and Brent crude oil have caught up with the energy sector, especially as domestic and global oil production keeps increasing. As I mentioned, we actually just recently had OPEC oil production cuts announced, but this growing supply has started to chip away at the gains that Chevron and EOG Resources made last year, as both companies have regressed from their 2022 highs. With rumors of potential acquisitions for major industry players, investors will get a clearer picture of the possibilities when Chevron and ExxonMobil both kick off energy earnings on April 28th. So we have Exxon here. This is ticker symbol XOM. We like to play this one a lot in the Discord. There's a couple members that really like trading this one. We have Chevron, which is CVX. And then we have EOG right here. And you can see that, Chevron and EOG are on a very similar path, right? And they're kind of mirroring each other. Meanwhile, XOM was showing much more relative strength. If we take a look, like the energy sector, the healthcare sector saw its fortunes reverse in the first quarter of 2023. However, toward the end of the quarter, the three most prominent players, United Health Group, Johnson & Johnson, and Eli & Lilly, started to gain some upward price momentum. And so, right here we have UNH on the top, we have Johnson & Johnson, and then we have Eli Lilly, ticker symbol LLY. And these stocks have really actually been gathering a lot of momentum here lately. Okay, especially heading into CPI and things like that. Anybody that's still worried about inflation or worried about the economy, healthcare is generally considered a defensive sector. And so, we're seeing a lot of inflows and a lot of pops in a lot of these defensive stocks and healthcare related stocks. Johnson & Johnson's role as a COVID-19 vaccine provider boosted its price in recent years, but as fewer people sought out the single-dose vaccine, its pharmaceutical sales took a hit. Nevertheless, J&J is a well-diversified company like the other two big names. On April 18th, investors watched closely to see if the company has made the necessary adjustments to continue thriving in a post-COVID-19 world. And so these are the past and future earnings data for the aforementioned 9 companies. If we look here at Berkshire Hathaway, all right, their estimates in Q4 of 2022 were about $4.16. All right, and they actually came out at about $3.06. Chevron was at $4.29, and the actual was 4.09. EOG Resources was about $3.40 per share, or EPS, and then we have it come in at $3.30. Johnson & Johnson was about $2.23, ended up coming in at $2.35. JP Morgan was at $3.10, and then it actually came in at $3.57. And we have Eli Lilly, we have United Health Group, we have Visa and ExxonMobil on this chart as well. Feel free to pause the video or take a screenshot. Now, the biggest earning beats of Q4 2022. Now, when we look at earnings reports from Q4 of 2022, the most recent data available, there were 5 companies across the S&P 500 and NASDAQ 100 that beat consensus estimates by 75% or more. Can these names continue their strong growth winnings ways this earnings season? So we're going to dive into those real quick, and I'll go over those. But if you've made it this far in the video, make sure to smash that like button and subscribe to the channel. Okay, guys. Now, the first one on our list here is PODD. This is the Insulet Corp. All right, and we can take a look here that EPS surprised in Q4 of 2022 by about 188%. Right below them, we have Corteva, ticker symbol CTVA, with about a 153% EPS surprise. We have Welltower Inc., ticker symbol WELL, with a 107% EPS surprise. And then we have Ceridian HCM Holding Inc. with ticker symbol CDAY. That one had about a 91% EPS surprise. And then we have Solar Edge Technologies, ticker symbol SEDG, with a 79% EPS surprise. Now, one thing I do want to point out is that currently the government is stimulating and there's a lot of stimulus towards these clean energy companies and towards building out clean energy infrastructure. So, I do think that, there is a lot of attention when it comes to certain solar companies or, clean energy ETFs, things like that. Now, the biggest earnings misses of Q4 of 2022, it's a large list, guys. It's a much larger list. So the same reports for Q4 earnings can also be used to identify names at the bottom of the barrel. Last quarter, there were 30 companies from both the S&P 500 and NASDAQ 100 that reported EPS figures that were 25% or more below estimates. If these were isolated performance lapses, could these names be poised to surprise the street this earnings season? So, definitely, take a screenshot of these, okay, and look through these. As it mentions here, there is a chance that if these were isolated performance lapses, that there could be potential surprises here for these stocks. Now, most notably, we have Expedia, we have Berkshire Hathaway, all right, we have Capital One, Eastman Chemical. We have ticker symbol EXPD, the Expeditors International Washington Inc., Key Corp. All right, there's Tyson Foods on here. We have Goldman Sachs as well, Digital Realty Trust, DLR, Boston Properties, BXP. We have US Bank Corp, Intel Corp. There's CarMax on here as well, Paramount Global, Warner Brothers, WBD. We have Netflix, Amazon, LVS, Las Vegas Sands. There's Micron Technology, ticker symbol MU. American Tower Corp. There's a lot of companies on this list. There's Boeing as well, ticker symbol BA. And Boeing and a lot of these stocks saw a lot of pain and have been seeing a lot of pain. And there's definitely a strong chance that could continue. But as we mentioned before, if they're isolated instances, then potentially there's a chance for some of these companies to, surprise Wall Street and get an earnings upside to the upside, or earnings surprise to the upside. Now, next here, we're going to look at companies on an earnings beat run. Okay, so if you combine the constituent lists of the S&P 500 and NASDAQ 100, it results in 523 unique companies. 125 have beaten analyst EPS targets in each of the last consecutive 8 quarters. With 24% of those companies on such a long and positive earnings run, 5 of these names have distinguished themselves further by also beating their EPS targets by 100% or more on average. We have Global Foundries, which is ticker symbol GFS. We have T-Mobile, ticker symbol TMUS. We have PDD Holdings, ticker symbol PDD. We have Occidental Petroleum, ticker symbol OXY, which Warren Buffett has been buying tons of this company. We have Host Hotels and Resorts, ticker symbol HST, and there also are companies on an earnings miss run, right? While nearly 1/4 of the S&P 500 and NASDAQ 100 companies have strung together 8 EPS beats going back to Q1 of 2021, there's 8 companies that have fallen short of consensus EPS targets in each of the last 4 consecutive quarters. That's going to be Boeing, ticker symbol BA. We have Ball Corp, ticker symbol BALL. Surprisingly, Google is on this list as well. We also have Lucid on here, ticker symbol LCID. We have Las Vegas Sands, LVS. We have Monster Beverage Corp, ticker symbol MNST. We have the Mosaic Co., ticker symbol MOS. And we have Newmont Corp, ticker symbol NEM. Now, corporate profits at the market level. Since the 2020 bottom, equities rallied on strong corporate profits and surrounding exuberance until 2022. According to Standard & Poor's, the composite EPS for all S&P 500 stocks reached an all-time high of $53.94 in Q4 of 2021. However, composite EPS as of Q3 of 2022, the latest data available, stands 17.7% below that high. Though market-wide earnings improved between Q2 and Q3, expectations for Q4 are for another 10.8% quarter-over-quarter decline to 39.61. The S&P 500 earnings are currently projected to reclaim that high watermark all the way out in Q4 of 2023. Does the street believe that the worst is over? And so we have a nice chart here, just kind of visualizing that for you guys, so you guys can help understand. So what we have here in purple is this is the S&P 500 EPS, the earnings per share, and then we have the earnings per share forward estimate. Okay, and so you can see here that it is going to decline here a little bit, but when you take a look overall, it is projected to actually rise. Okay, and so this is where currently it was at the time of this data, and we can see that it is actually heading upwards. Now, the recent downtrend of market level EPS has pushed market valuations in the same direction. The S&P 500 price to earnings ratio, this is the PE ratio, rose throughout all 4 quarters of 2020, but fell in all 4 quarters of 2021, as well as the first 3 quarters of 2022. As of Q3 2022, the S&P 500 PE ratio stands at 19.2, which is 21.2% below its historical average of 24.3. The S&P 500 forward PE is estimated to be higher in the last quarter of 2022, as well as the first quarter of 2023, but fall after that. Will S&P 500 earnings hold up in Q4, or will they continue downward? And so that's what we have here as well. Okay, we have the PE ratio. This is the price to earnings ratio here in purple. All right, and that's what we have here. And then we have the forward estimate here in orange. Right, and you can see that is expected to go up a little bit, but then also go back down to about 18.6. So let me know you guys' thoughts below. What stocks are you interested in playing this earnings season? What was the biggest thing that you learned in this video, right? I mean, we took a look at some of the companies. I really think that this data set right here was really interesting. Companies on an earnings miss run, as well as the companies on an earnings beat run. We also took a look at some of the big winners, some of the laggards. Let me know your thoughts down below. I appreciate you guys watching, and if you made it this far, most likely you're going to enjoy one of these next 2 videos as well, so make sure to click on one of those.